I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Hilliard MacBeth, author of the book When the Bubble Burst, Surviving the Canadian Real Estate Crash. He's also a portfolio manager and financial advisor in Edmonton. However, today, Hilliard is speaking to us from Toronto, where you plan to be a guest speaker at a Toronto conference on real estate. What are you going to tell the folks when you give your message?
Well, hello, Jim. Nice to be on your show again. And I'm planning to speak tomorrow about the fact that the Canadian housing market is in a bubble, and one of the questions that's been raised is, could it be a soft landing or a hard landing? And I will show, hopefully convincingly, that it has to be a hard landing. There's no chance of a soft landing. And then I'm going to, in the third part, I've got 30 minutes, so I have to get through this quickly. I'm going to talk to them about the impact on the Canadian stock market, which primarily will impact the financial sector, which is also, the financial sector is the biggest sector by far in the Canadian stock market. It also includes all the real estate stocks in there as well. So there's a number of REITs and real estate investment trusts, and there's also companies like Brookfield and that are included in that segment, as well as life insurance companies and that sort of thing. But it's mostly lenders, the big banks. There's a couple of alternative lenders like Home Capital and First National Corp and Equitable and a few others like that. So, and all of those will be impacted. And unfortunately, for us in Canada, that are invested in the Canadian stock market, it's a huge segment. So, you and I have talked in the past about how real estate is a big segment of the Canadian economy measured by the GDP. But then also, I guess maybe not coincidentally, in the Canadian stock market, on the Toronto Stock Exchange, the financial sector is by far the biggest. It's just about twice as big as the second biggest sector, which is the energy sector. And so that'll be interesting. And there'll be some other people presenting at the conference that'll take a different point of view, so I get to listen to them too. So it should be fun. And then there's a round table towards the end of the day. I'll have a question. But I think I didn't get invited last year. They have this every year. I think this is the fifth one. I think last year there would have been more of a debate about whether it is a bubble or not. I think today or tomorrow it'll be more like, yeah, it's a bubble, but then the argument becomes, is there a way to let the air out slowly, or does it have to be a hard landing? That's kind of probably the big debate tomorrow.
Well, of course, too, in BC, they instituted the foreign buyer 15% tax for the Greater Vancouver area. Ontario's premier has said no way are they going to implement one. Was it needed in the first place?
Well, I think Vancouver had, I guess the problem when you're a political leader, you almost have to, the pressure was so great they have to do something, and I understand the election isn't too far away. And I think the bigger change, though, were the changes to the reporting of the gains on real estate, which is, of course, filing the form of CRA. And then now the even bigger changes are the rules about CMHC financing and especially risk sharing. So the situation right now is that the lenders, as long as they can coerce the home buyer to pay the CMHC, or there's two other private insurers as well, Genworth and another one. As long as they can get them to pay that premium on the insurance, they don't have to worry about the risk of whether that person would pay back the loan, as long as they meet the underwriting requirements. And so that's what they call moral hazard. So the lenders are kind of lending without really worrying about it very much. And the government, I think, correctly has identified that as the one of the big loopholes in this whole thing. Evan Siddall is, we've talked about that before. I think he's been talking about this for 3 years now since he's been appointed as CMHC head, and he came from the investment banking world before that, and I'm sure he was as surprised as I was to find out that the lenders aren't taking any risks. So of course they're going to shovel money out the door as fast as they can. Now, that doesn't explain Vancouver entirely, because CMHC, the average CMHC loan in BC is $300,000. The average CMHC loan in Alberta is about $330,000. So it is mostly in the average price home, not the real high end stuff. Of course, that's not an average price for Vancouver, I know.
Right, $300,000. That's your down payment.
Yeah, yeah. Well, and the other thing that came out, which is really interesting, I think, is that, and this is maybe connected to the report today, that sales have plunged 39% in Vancouver, and prices are down month over month, although I guess they're still up year over year. But it is possible for these lenders, if they want, to get the CMHC insurance on larger loans. So in excess of $1 million. I had no idea about this. I sort of vaguely knew about this, but it's kind of surprising. So a bigger loan, as long as you have 20% down payment, I guess the idea was that that's a low risk loan. It's called a low ratio loan. And so the lender would immediately go out and buy the insurance. It's called bulk insurance. And then it becomes a risk-free loan for them as well. So they had things like, it could be an investment property, it didn't have to be owner-occupied. It could be amortized over more than 25 years, up to 30 years, or maybe even longer. It has to have 20% down payment. The credit score can be lower than 600. So the change on November 30th is coming in is you have to have at least a minimum 600 credit score. And that's not a very high credit score. I'm not totally up on credit scores, but I don't think that's very high. I think the average credit score is over 700. So that's a huge loophole, because, and this is what's causing a big uproar, because what they call monoline lenders, the people whose main business is just doing mortgages, they can't afford to deal in those mortgages if they can't get CMHC insurance on them. Because basically they don't have the deposits like a bank does. So what they do is they get the CMHC insurance on it, then they sell it into a pool of mortgages, the mortgage-backed securities. If anybody's seen the movie The Big Short, will probably recognize that. That was the thing that was going on, and it certainly was an interesting loophole. And as of November 30th, the CMHC rules are going to change quite dramatically, and they're going to tighten that up quite a bit. So that would affect. To the extent, I don't know, who knows how many of these expensive properties in Vancouver and Toronto were getting CMHC insurance. But if they had 20% down, they could get the financing, and then the lender would immediately turn around and buy the insurance. In this case, the lender pays the premium, not the home buyer, and that gets him off the hook in terms of if something goes wrong. So that is going to be a huge change. In fact, it's quite an uproar here in Toronto, because there's a huge number of companies that are small companies that are doing that, and they're saying it could put them out of business, and they may not be exaggerating.
What kind of an impact would that have on the overall market?
Well, I think that that's a huge factor in Vancouver and Toronto, because obviously the homes are much more expensive there, and I think, unfortunately, the rule is for the 20% down payment, you're not supposed to borrow that. But I suspect there's a lot of speculators that were borrowing it and borrowing it someplace else, and then showing up with a 20% down payment, and that allowed them to get the mortgage, and then amortizing it over a longer period of time keeps the payments low, and then the lender could bulk insure it with CMHC or one of the other insurance companies, and it keeps the wheel turning. And if you remove that from the demand side, it could have a huge impact. It's quite. But I think the other thing is the combination of all these things, like the change in Vancouver with the foreign buyer tax, the change with the CRA reporting where everybody has to file a form when they sell a property. I think there's lots of speculators that probably weren't filing any forms. even though in some cases maybe it wasn't their principal residence. The risk sharing with the lenders, and that'll affect the banks in a big way. That's another whole topic about how the banks account for those loans on their balance sheet, and then some of the other changes that have been made. The combination of all of that, plus the fact that the economy is very weak. I mean, we had the report yesterday. I think Canada was 1.2 or 1.3% annual growth, and Alberta's in a very severe recession. So the combination of all that, I think it could be enough to tip the real estate market over into a bursting of the bubble. And unfortunately for the economy, the real estate section is such a big section of the economy, it could trigger a recession. So the causation, the direction of the causation could go the other way. The real estate slowdown could be the factor that triggers the recession. I was looking at the number of people employed in real estate, in construction Canada-wide. It's a huge, it's higher in Alberta. It's 12% of all employment in Alberta. But I don't know the exact number for Canada, but I think it's not quite that high, but it's very significantly higher than it was. That's, by the way, in Alberta, that's a tripling from 4%, 20 years ago. So there's a lot at stake here. There's a lot of people that are really depending on this real estate sector. So the finance minister and the Liberal government that got elected a year ago is hoping that they're able to do this in a way that lets the air out of the balloon slowly. They've got 3 more years, I guess, till the next election. But people aren't going to be happy if these changes trigger a bursting of the bubble in real estate. There's going to be some very unhappy people.
Wouldn't natural market forces do this anyway? Because in Vancouver, house prices were already falling. Sales were already falling before they brought in this 15% foreign buyer tax in the greater Vancouver area. It wasn't necessary, but it sends out the message you're not welcome anymore. Exactly.
And I think you and I were chatting off air that it goes back as far as February. And that was before most of the changes in the CMHC financing. The big changes came in September, October, and then November 30th. So that was long before the changes in the CMHC. So my thesis always was, since the book came out a year and a half ago, that the bubble would burst of its own weight. Because what I think is not widely understood is that the higher the prices go, the more new money you have to keep putting into the system to keep it going. Like it takes quite twice as much money to keep housing going at at $1 million as it does at $500,000, and that either has to be new home buyers coming in or foreign buyers coming in. And if you cut off the money, even slow it down just a little bit. It doesn't even have to be cut off. Just slow it down a little bit. Make it just a little bit tougher for those young people to qualify, which I think is a good thing, actually. It could choke off enough of the demand, because the concept in economics about the marginal buyer is extremely important. You got literally it's the straw that broke the camel's back. You got one buyer that fails to qualify, and maybe 2 more sellers that just appear for whatever reason, maybe even just random reasons not related to anything. And now you've got a surplus, right? So you got sellers that can't find a buyer. And before, maybe you had an excess of 2 buyers and couldn't find a seller. And it's all at the margin. So, and of course, the other thing that we're going to find out in this, which has been not clear for a long time now, is how illiquid housing can be sometimes. How long it takes to sell a house. And, when you get away from the frenzy that we've experienced, especially in Vancouver, but really we had it in Edmonton and Calgary, we had it all across Canada. Still going on very much in Toronto. When you get away from that frenzy, next thing you know, it's taking 6 months, 9 months, a year to sell a property. And during that period of time, sometimes people get desperate, right? And they start cutting their prices. So that's all it takes. I mean, all you need is a few people to cut their prices, and then the buyers think, oh, now the buyers start thinking, well, maybe it's a buyer's market, not a seller's market, and the whole thing shifts. And it doesn't take sometimes doesn't take a lot. But for sure, I would say if this is the start of the bursting of the bubble, somewhere around this time, if you fast forward 3 years to say 2019, and you look back on this period, the changes that the government made, like the 15% tax and the other changes to CMHC financing, that'll be what people will point to, and they say, "Well, that's what burst the bubble." There's no question about that. We'll never know. We'll never know if it was going to burst anyway. I mean, what you just said would be my guess was what was going to happen anyway, but we're never going to be able to prove that one way or the other.
We'll have more with Hilliard MacBeth right after the break.
GEM International is a new diamond explorer in the richest diamond producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109 carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. GEM International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
Welcome back. We're speaking with Hilliard MacBeth. Hilliard, do you think the federal government has any idea what kind of impact these new rules they've imposed will have?
I think they do to some degree. There was an op-ed article in the Globe and Mail by Evan Siddell, and he said that we intend to cool this off. But I think maybe where they're not, they're going to be surprised. Let's put it that way, is how big an impact it'll have on the economy. I'm sure that they must have staff in the Department of Finance that present the numbers. And the Bank of Canada has pointed out in their latest report, which came out fairly, I think, in September, about how many households there are with very, very high debt ratings. So, I mean, one of the problems is you've seen that number. They quote 167% household debt to disposable income, which is great. But that includes all the people, like the older people, who don't have any debt at all. So what the Bank of Canada did was they said, okay, what about the 20% are in the worst shape, the 20% most precarious households, let's put it that way. And there's a whole bunch of them. There's 20% of them that have a debt ratio of 450%, never mind 167%. So that's the ones they're worried about. They don't care about the rest of them. So, and they're fully aware of that, because for sure they would have seen the Bank of Canada report. So, I think they feel they have to do something. I think they're probably shocked because they have actually made changes going back quite a ways, back to 2012 or something, even that far. They made, small changes, but none of the changes, like one of the changes, for instance, I think it was a year ago, approximately, they changed the down payment rule for CMHC mortgages over $500,000, and you had to have 10% down instead of 5% down or something. But there's only, I calculated it, so there's only like 10% of all the CMHC mortgages are over $500,000. So that was just tweaking around the edges, that one. But these most recent ones are much more impactful. They are much more serious, and so I think that's going to be a big impact. And now the good news is that the federal government in Canada actually has a pretty low debt to GDP ratio, so they've got room to help all of us out if they end up being surprised at how big an impact this has on the economy. They have room to pull some levers and spend some money, and if they decide that they have the will to do that. They just did a fiscal update yesterday, and they added a little bit to the infrastructure spend, and it's very small amounts. I mean, it's they're talking way less than maybe they're talking, I think, over 11 years, $180 billion. So that's not even 1% of GDP. So what we're talking about here is residential construction. Never mind anything else. Just residential construction is 7.5% of GDP. And what happened in the U.S., it was similar to that before that bubble burst. It dropped all the way down to 2%. So we're talking about taking 5% percentage points if we mirror what happened in the U.S. Maybe we won't drop as low. In the past, we haven't dropped as low as they have. maybe we'll go down from 7.5 to 4. Well, that's still 3.5% of GDP. And to avoid a nasty recession, somebody has to make that up. And it's probably not going to be business investment. It's probably not going to be oil and gas investment. So it'll have to be probably government spending. And we'll see if the new prime minister and if the finance minister are willing to spend that kind of money. Those kind of numbers are pretty substantial. We're talking 20, 30, 40 billion a year extra. They're talking about a deficit of 29 billion a year. They would probably have to make up for residential housing investment dropping by 3%. They would probably have to double that deficit.
Really? So the government would have to spend more by bringing in these tough rules. And also, what about the people they force into bankruptcy? Are they going to protect them?
I don't know. I think they're going to be so busy bailing out the lenders. That's what happened to the U.S. They bailed out the lenders and they let all the people, half the middle class in the United States was wiped out by the housing crash, right? And all of their savings that they had were in the real estate market. They didn't really have any savings anywhere else, right? They didn't have RSPs or mutual funds or TFSAs or any of that stuff. In the U.S. they call them IRAs. Most of the people just had their equity in their home, and when the prices corrected 30 to 40%, that was all gone. So there's a whole bunch of people in the U.S. that basically got dropped out of the middle class as a result of the housing crash, and it happened in Ireland. The same thing happened in Spain. It happened in many, many countries. But I don't know what the government could do about that. I don't know. They ran on a platform of helping the middle class. They talked about it yesterday in their fiscal update. But I'm not quite sure how. I mean, what people need, they need jobs, right? And they don't need expensive housing, but they need jobs. It's a tough problem. It really is. But these changes that they're making will get the blame for bursting the bubble if it does turn out that that's what happens in 2016. And then presumably at the next election, the government will have to face the voter as well.
Well, I've also heard the same thing about the carbon tax that's been imposed on the provinces. BC already has one. And frankly, I haven't heard anybody tell me that they've bought less gasoline because of the high gasoline carbon tax. Well, all it does is suck out money that they would have spent on something else.
Yeah, and I think there's a big debate going on in Alberta right now because of the carbon tax, and also there's the limit they put on the greenhouse gas emissions for oil sands. And for the average household, it's a pretty small amount of money, and I don't think it's going to affect them that much. But maybe cumulatively, one of the things I was here actually in Toronto last week, and there was presentations. I was just attending the conference, but there were senior bank presenters, and they were asked, "What about these changes?" And they said, "Well, it's going to increase the cost of finance. The cost of mortgages has to go up." Of course, the banks have to make their profits, right? So the combination of all these things maybe is what the problem is. The higher interest rates, tougher conditions for mortgage credit, and carbon tax. But, it's not that dire. I mean, in Alberta, the greenhouse gas emissions, 100 tons is the limit that they imposed, the new NDP government. Well, the oil sands, assuming that they keep expanding the oil sands, which may not happen, but assume it does as the plans are, they don't even hit that 100-ton limit until 2030. The current emissions are something like 65 or something like that. So they've given them, or maybe 70. So there's room for another 50% increase from where we are today. And people are literally screaming and pulling their hair out because of this 100-ton cap. And it's crazy. We probably never will get to it, right? So it's, I don't know. It seems, I think there's a lot of unhappy people, and none of the stuff is that dire, but cumulatively it might be. And I don't think you and I are going to talk again before the election next week in the U.S., so looks like the polls are tightening between Trump and Clinton, and I don't think people are giving Trump a big percentage probability of winning. I think it's moved up from a very low number to something maybe 30% now or something. But in the event that he wins, if he were to, then he's talked about tearing up the trade agreement. So that would be another negative for Canada. So there's a lot of headwinds in Canada, and hopefully we can find a way to get through the challenges that we face. I'm sure we will. I don't have any doubt we'll get through it, but we might, in the short term, we might have to suffer a little bit. And what they said when they announced all these changes in the housing is that in the long term make everything more stable. But in the short term we might have to pay a price for it.
Well, don't forget, income tax was brought in during the First World War as a temporary measure, and we're still paying it. So I don't know how long a time we're going to give ourselves to get over this pain.
The short term becomes the long term. Is that what you're saying? The short term, yeah.
Well, have you ever seen them remove a tax?
I mean, my goal in writing the book was when I saw people were getting more and more involved in real estate, taking on more and more debt to get into real estate. My intent was to try to have some influence to say, wait a minute, maybe real estate isn't the best place to put your money. But people were so enthusiastic about real estate, almost to the point of a frenzy, that it's going to end, and also, unfortunately, most likely it's going to end badly in the sense of a crash rather than just a mild. That's certainly what I'm going to tell them tomorrow. It's not going to be just a mild kind of leveling off kind of thing. The math just doesn't work. More likely it's going to be a pretty sharp drop in prices, anywhere from 30 to 50%. And you think about those people. So this is how crazy it is. A low ratio mortgage is considered anything where the loan to value is 80% or less. So above 80% is called a high ratio mortgage. Well, in Vancouver, if prices went back to 2015, just back 1 year, all of those so-called low ratio mortgages, the mortgage would be equal to the value of the property if prices were just rolled back 12 months. So that's how risky it is. And that's considered a safe mortgage, right? That's the craziness of it when you get prices increasing that rapidly.
Hilliard, where can people get copies of When the Bubble Burst, Surviving the Canadian Real Estate Crash?
So it's on Amazon.ca and Amazon.com, and it's also at Chapters and Indigo, and they have online purchases. And then you can also buy it in the ebook version on Kindle, and I think Kobo as well. So there's lots of ways to get it. And then I understand there's lots of copies at the library as well. But somebody just tweeted yesterday that in the Mississauga, Ontario, all of the copies are out. So you have to put your name on a waiting list to get a copy in Mississauga, Ontario. So I would say to people that are on the waiting list, just buy the book. You can't wait. This is changing so fast. You got to, and whatever. I think you can get it for $18, so it's not that expensive.
Hilliard, good luck with the talk in Toronto.
Thanks very much, and I'll fill you in on what happens the next time we talk.
My guest has been Hilliard MacBeth, author of the book When the Bubble Burst, Surviving the Canadian Real Estate Crash. You're listening to HoweStreet.com radio. Find us on Twitter at Talk Digital Net. Our YouTube channel is Talk Digital Network. Millions of people have checked it out. Questions for the show can be emailed to info@HoweStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HoweStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HoweStreet.com radio is a production of HoweStreet Media Incorporated.